Well, 10 months ago, Bidvest founder Brian Joffe approached the board of Adcock Ingram with an unsolicited offer to buy 2/3 of the business. Adcock's shares were then trading around 50 Rand. Joffe's cash and shares offer was worth 63 Rand. He was rebuffed by the board of directors as being opportunistic. Since then, a cash and shares offer by Chilean group CFR has been supported by the same board. Yesterday, Joffe made an all-cash offer at 70 Rand a share and warned that he would be launching a legal challenge against the CFR Adcock agreement. That happened this morning. This is Joffe's first interview on the subject. He came in earlier. With us in the Power Lunch studio is Brian Joffe, the Chief Executive and founder of Bidvest. Bidvest, as you would well know, has launched a counter-offer to the CFR, its Chilean company's approach towards Adcock Ingram. Well, it looked, for the Chileans anyway, to be home and hosed. That isn't the case because the deal actually started off, Brian, when you approached Adcock Ingram in the first place.
Yeah, I think when we originally approached them, the share price was about 50 Rand a share, and obviously shareholders are doing quite well now. It's 70 odd. And we obviously feel that there is an opportunity with the right management and skills in place to develop Adcock into its old glory.
The right management? What have these guys been doing wrong?
Well, I don't want to sort of get involved in what they're doing wrong, but I think the proof's in the pudding that the company over the last number of years has just declined year on year compared to the brilliant performance of Aspen.
So the opportunity is there is an asset, and you think you can turn it around?
Yeah, I think we've obviously done some homework on it, and there are certain parts of the business I think we can immediately add to. There are certain other parts, more specifically if you take the generic part of the business, maybe we're going to need some strategic input from a partner. But we've lined a lot of this up, and hopefully we'll be able to deliver just what the shareholders need.
So you have lined it up. I say this because the response this morning from CFR to your offer yesterday was that you don't really know much about pharmaceuticals. The plant is half empty. They can put throughput into that plant. How can you?
Well, what's interesting is that plant was built by the South African management that everybody's rating at the moment. They've spent about 2 billion Rand in capex, so it's at the low. So these, the CFR company is obviously looking to get control of this thing by using expensive paper to acquire assets that have basically just been renewed. I think if you have a look at what their proposition is about synergies, they're talking about selling more. But in the final analysis, the CFR shareholders are getting about 83% of the benefit, and the Adcock shareholders about 17%. So, one can see who's doing the better deal.
How do you work that out?
Well, after the transaction, because of the share situation, the Adcock shareholders will own about 17% of the company, of the combined company, and therefore obviously be entitled to 17% of whatever synergy benefits there are.
But they are getting cash.
Yeah, they're getting cash for half their shares, but they're obviously for the piece that they're going to participate in. So there's been a lot of word about these so-called synergies of $400 million. Well, it's nowhere near $400 million because it's $400 million over an undisclosed period of time, and most of that relates to revenue, not to profits. And so my guess is that it's not attributable to the Adcock shareholder is not a significant amount of money. So whilst we may not know what we're doing, we obviously don't have to do a hell of a lot to match what the Adcock shareholder is going to get out of this transaction.
Brian, you did mention yesterday that you have a legal challenge.
Yeah, we're in the next, well, by the time this is broadcast, obviously we will have served papers on various respondents alleging that there is financial assistance in this transaction and non-compliance with the statutory requirements of setting up the scheme meeting. So in our legal opinion, their meeting is void and therefore unlikely to succeed.
Just explain that in layman's terms, financial assistance.
Well, that's the use, because CFR itself cannot finance the transaction because it's bigger than itself. It is using the assets of Adcock, gearing the assets of Adcock in order to effect the transaction.
So it's doing a management buy, or the old leverage buyout?
Well, there are certain procedures that you have to go through in order to be able to go through the use of the assets, and they haven't complied with that.
That has, I suppose, part of the story as well, but once you go to court, it can drag things out. And we know from the Harmony Goldfields takeover battle in South Africa. The reason it didn't succeed was because Goldfields managed to drag it out. Is that your tactic here?
Well, the tactic is not really a tactic. It's either legal or it's illegal. And in our sense, it's illegal. And as a shareholder, we obviously are concerned as well that if it does get drawn out for a protracted period of time, it's not going to be good for anybody. So we decided that we making an offer which is a lot more certain. And on that basis, shareholders need to decide whether they want to get involved in this protracted debate as to whether it's legit. Because if it isn't legit, even in a year's time or 2 years' time when it may get to whichever court, it can be reversed from day one. And so the shareholders are going to be in a huge mess. So, but this is a legal, technical stuff. And from our point of view, we see the benefits in the business case of Adcock, not obviously the legal case.
It's almost like you've got three strategies. You've mentioned the legal case now, and if it goes on for years, it is going to be uncertain. The other strategy is a 70 Rand a share offer. Why not? You're an 85 billion Rand company. Why not offer 12 billion Rand, 15 billion Rand if you want it that badly?
Well, firstly, 70 Rand is very comparable to their offer. First of all, our 70 Rand is today all in cash, and it's certain. Under their offer, we don't know whether it's going to be certain, and the present value of their 70, and it's not 73 Rand, it's less because their share price is trading down. So the present value of our offer is better than theirs. And if you take into account that we will be able to declare dividends almost immediately, the company, whereas they're going to have to wait until the full implementation of the scheme, which could drag out until March, April, or May of next year.
And I suppose on the other hand, your offer does not include the injection of debt, point you were making a moment ago.
Yeah, so I think that the real issue around this, around Adcock Ingram is, do the shareholders believe there is potential in Adcock Ingram? If they do, it's better for them to get 100% of the upside, or near 100% if they're going to sell some shares in Adcock Ingram, rather than to take CFR, which is an unknown entity, highly priced. If you have a look at their transaction, they're using expensive paper to acquiring an underperforming asset.
You did put 70 Rand cash on the table yesterday. Have you had any reaction yet?
Yeah, yesterday we acquired almost about 900,000 shares. And obviously it was early days, and obviously as we close to the meeting, we will see. I mean, a lot's going to depend, of course, on how everybody votes. It's not only us. The PIC is obviously an important component piece as to what the outcome is going to be, and we obviously watch with interest what they're going to do.
PIC is your biggest shareholder at Bidvest. Clearly you can talk to them anytime you want to. One does when it's your biggest shareholder.
Well, I don't think it's as simple as that. The PIC is very aloof in this particular matter. They've put up a lot of walls in order to safeguard their decision-making process. We haven't had the opportunity of using Bidvest as a vehicle to be able to talk to them. So whilst we have had one meeting with them, they are very, very, as I said, very, very careful on the governance in this particular case.
How much do they vote? There's a lot of confusion. I had looked through the Adcock annual report, 2012, the most recent one, and in there it said that they vote 14.4% of the Adcock equity. Yet there's another number that says 12%. Do you have any insight?
Well, I think there's the issue firstly about treasury shares, of course, which won't vote, and the BEE shares which can't vote. So if you take the percentage that the PIC could vote, as I understand it, it's 18.9%.
All right, so once you take those two other issues out, 18.9, you've got a little bit more after yesterday, nearly 5%. Well, that, I suppose, gets back to what we said right in the beginning of this whole debate and discussion, and that is the PIC has the swing vote.
Yeah, look, I don't want to say it like that, because I think every shareholder has got the right to understand and to vote. And I think that the shareholders, in my opinion, haven't been fully informed as to what all the pros and cons are in this transaction. Even if you have a look at the documentation, if you look at the JP Morgan report, they themselves haven't done any of the work on this, on the synergies. They say they've relied on the management. So, no, it's untested.
The management are not going to stay on if you take over.
Well, I don't know. That obviously will be up to them.
The board is certainly not going to stay on. They've rejected you. You rejected your initial approaches.
Look, I feel a very rejected soul. What can I say? I mean, at the end of the day, this is business. It's not personal. And whilst in a way they've tried to make it personal, from my point of view, this is just a pure business proposition. We were the guys who sought out Adcock in the first place, and we were the guys who identified its shortcomings, and we hopefully will be the guys that can fix it.
If you went in initially in the early 60s for a share price, what made you change your mind to believe it's now worth 70 Rand?
Well, the ideal is a little bit different to where we were before. Remember, we were bidding for 60% of the company originally, and we were giving part Bidvest shares and part cash, which equated to about 63, 64 Rand a share. We decided during the course of the last week that we needed to up that in order to be sure that we were comparable in relation to the price that they had offered. And so it's a little bit different, and we obviously are not getting control for the 34.5%. But we obviously will be able to yield some kind of influence.
And you've used that 34.5% before with Amalgamated Appliances and Mvela Serve. Is it a similar strategy that you're employing here? You can do it quickly.
Well, I mean, I don't know what the second step will be, and we obviously don't know what the relationship between us and the other shareholders will be post the transaction. On the assumption that everybody's on sides with us, of course, we would like to see ourselves get to a better controlling position over time. But it's unknown at the moment.
The chairman of CFR is in the country at the moment, Daniel Salvadori. He says this makes no sense for South Africa. This makes only sense for Brian Joffe.
Yeah, I think that's a bit rich coming from them, seeing that they control 52% of CFR. I've got about 1% of Bidvest. Saying they get 83% of the benefits and the Adcock shareholders get 17% of it. I think it's a bit rich. I think he should really think about what he's just said.
And what you've put together, do you think that, again, getting back to the PIC, from what the PIC has explained to us about its strategy, that this would resonate?
Look, as I said, I can't talk for the PIC. I think we're concentrating on what Bidvest's strategy is and what we think is the best for Bidvest and for Adcock. Of course, our primary responsibility is to the Bidvest shareholders, but Adcock will remain listed. We have a fiduciary duty if we are involved in it, certainly in its management, to make sure that we deliver the best performance. And all I can say is that Bidvest, this is not the first time Bidvest has got involved in buying underperforming assets. And our track record speaks for itself. And we've been around for 25 years, and we've grown from very minimal beginnings of about 8 million Rand to 80 billion Rand. So it hasn't come out of nothing. If
you take McCarthy's, which was in a similar situation, if you take Rennie's going back before that, is it a similar, do you see Adcock as perhaps being more attractive as a turnaround prospect than those two were?
Look, each of them have got their own scenarios. I mean, the one thing with Adcock, of course, it's more regulated than some of the other businesses that we've bought, and therefore the rate of change and the ability to change quickly, of course, is to some degree impaired in certain parts of the business. But in the segment of over-the-counter pieces, the products they've got, the way they deliver, the computer systems, management motivation, our ability to scale up, our ability to fund acquisitions for Adcock, I mean, there's a multitude of areas that I think we could add to quickly. And, we've never in the past really had any confrontation with the managements that we've acquired. They've all bought into Bidvest philosophy and strategy. And, 90%, 95% of all the businesses that we've bought, the management at the time of acquisition are still there today.
Well, it doesn't look like that'll be the case in this instance. But Brian,
who knows?
What happens from here? We have a vote on the 18th of December. What happens from your perspective?
Well, obviously the vote will happen if of course, the legal action doesn't interfere with that. And I mean, the board of Adcock, the regulators, everybody will have to take a good look. The banks that are funding this are at huge risk if we're right and they're wrong.
How so?
Well, because of course they'll have no security and they're going to advance the money against the transaction that's going to get unwound. That could be, and this is a lot of money. So the banks themselves have got a lot to lose, and I assume that they will revisit the situation themselves. They'll take presumably their own opinion in this particular matter, and then we will see how it develops. What's interesting, of course, why they chose the 18th of December when, of course, everybody, including myself, is supposedly on holiday.
Well, we look forward to that. Just to close off with, you've also bought a few shares in Telkom. Are you planning something similar there?
Look, Telkom has also been an underperforming business, but what has impressed us about Telkom currently is the new management team. They've shown, certainly from our point of view, some degree of professionalism, and I think that augurs well for the outcome of Telkom over time.